Retail trade rose 0.6% in October, which was more than expected and much more than last month. Over the past 12 months, the increase was 3.4%. This is not data that demands a rate cut, except if you look at it like this. Total retail sales have been rising strongly for 3 years, but real spending per person, adjusted for inflation that is, has been falling. So the two reasons retail sales are rising are population growth and rising prices. The problem is that the Reserve Bank looks at the blue line, not the red one, and it tries to get the blue line to flatten by pushing the red one down. Today's other release from the ABS was building approvals. A fall in house approvals was more than offset by a huge jump in apartments and units, most of which are in Melbourne and Sydney, which explains why house prices in Melbourne and now Sydney are falling. This graph shows cumulative dwelling completions, not approvals, but places actually built over the past 15 years. So increasing supply is making housing more affordable, at least in Melbourne and Sydney. The share market was flat, but Myer stood out with a gain of 12%. The 124-year-old department store is getting a lot of love from investors at the moment. Its share price has doubled in 5 months. And Pilbara gold miner De Grey jumped 29%, having dug up a takeover offer from Northern Star. Global markets all performed strongly, led by New York. Oil dropped 1.7% on commodity markets, while Bitcoin edged a bit closer to $100,000. And the Aussie dollar eased slightly to just below 65 US cents. And that's finance.